Good morning. It is Tuesday, July 9th, 2024. Just before 10 a.m. on the East Coast. This is Robert Sin at CEO Technician on X, at Goldfinger on co.ca. And this is Goldfinger Capital on YouTube. Again, if you enjoy my content, if you get value from this video, please hit the like button and subscribe to this channel and subscribe to all my channels so you get all my content as soon as I put it out. Some of it could be quite timely at times, and other times not so timely. It's good to be back home after a week on the road. Talk a little bit about my travels here, and then I'm going to head off to the Rule Symposium, which happens to be here in South Florida. It's in Boca Raton at the Boca Resort. So I'll be spending the afternoon up there and probably talk more about that in a few days. You know what I learned the next few days at the Rule Symposium. So I don't really have a well-defined plan for this video, but I'm just going to get right into it, and starting with gold, because I really think that something really important happened last week in gold. Let's see. Yeah, I got a bunch of lines here. I've just been screwing around with this chart. Excuse me. I didn't really prepare this chart accordingly, but this is the end of last week. This is last week's Thursday, Friday price action, where gold moved up from 2360 to tapping 2400 actually Friday afternoon, and then we gave some back yesterday. So why am I so bullish, and what happened at the end of last week? Well, I think the big takeaway from last week is the labor situation in the US is finally rebalancing fully, with the unemployment rate now ticking above 4%. We're back to November 2021 levels, so almost 3 years ago. And if you think back to November 2021, that was when the Fed hadn't yet started hiking. They hadn't yet freaked out on inflation. And the labor market was still strengthening, but it wasn't yet at peak strength, right? We were still getting over the pandemic in November 2021. So the data we saw last week, we continue to see revisions downward to the monthly non-farm payrolls numbers. I mean, 10 of the last 15 have been revised lower. So Friday, we learned of the revisions to April and May were a total of negative 111,000. If you subtract that from the June headline number, the total, addition of jobs was less than 100,000. So versus consensus of plus 180K in June, that's a pretty big miss that we got on Friday. And the fact that average hourly earnings are now moderating to 0.3% or less per month, that's consistent with inflation around 3%. And the fact that unemployment is now above 4%. So, I think that's the biggest the one, is the fact that the unemployment rate is actually breaking out. And I'm not going to do technical analysis on the unemployment rate, but this is a very strong signal over time. Like if you look back at the unemployment rate 30, 40-year chart, when it starts to curve back up after a period of staying at basically full employment, which is what we've been for the last 2 years, essentially, it's a very strong recession signal. So that's what I took from last week. I think that we have a recession signal now, the strongest one we've had in a long time, since probably 2020. And I actually think this is the most bullish setup for gold since 2020. So it's the fact the Fed finally has to give in now, and they're going to give in September. Market didn't move the odds of a September rate cut above 80% yet. It's like 77%, but I think it will move up over time. And Citi came out with a call over the weekend, actually, calling for a September rate cut and 8 consecutive rate cuts through July 2025. So that's a big call, and I'm right there with them. I think that's exactly right. So if Citi is right, and we're set for 200 basis points of rate cuts over the next 12 months, I am very comfortable with saying gold is going higher over the next 12 months. How high? That's obviously tricky to answer, but I think 2,500 is sort of a minimum, and it could be 27, it could be 2,800. It depends upon a multitude of factors. So many variables affect the gold price that we just don't know, right? But I'm very comfortable calling for higher gold prices here over the next 12 months. And the presidential election mess only just adds to the bullish case for gold. I mean, so first of all, both Biden and Trump are deficit spenders. They only know how to spend. They only know how to pander to their bases. They only know how to buy votes. They are politicians, after all. The deficit is only going to get bigger, much bigger. And during this so-called robust economy of the last several years, the Biden administration had such a great economy, they didn't put a dent in the debt and deficit. In fact, quite the opposite. The deficit spending has been out of control the last 4 years with Biden, right? And it was out of control the 4 years under Trump, right? Trump ran the biggest deficit in US history in 2020. I know pandemic, blah, 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 but still, he was at the helm. These guys don't know how to balance a budget, right? They have no interest in it. The market will finance them, right? They'll just buy votes. So we're going to have the biggest vote buying sort of exercise in history over the next 4.5 months. It's bullish for gold. China sees which way the puck is going. They're skating to where the puck is going. They continue to accumulate metals, precious metals, gold and silver. That's not going to stop even if they take a month or two off. Other dollar skeptic countries like India and Turkey. I mean, Indian Prime Minister Modi met with Putin in Russia and gave him a hug like they were girlfriend and boyfriend, right? So India is not really an ally of the US. They're playing their own game, just like Turkey is. What's best for India? What's best for Turkey? They have no interest in aligning. They're just going to play all sides. And meanwhile, they will continue to diversify their reserves into gold. The fact that India can buy barrels of oil from Russia and give them rupees is a great deal for India. Okay, it's a great deal for India. And then take that oil, use it for their people, and what they export, the proceeds from those exports, diversify some of it into gold. So it's the great global gold recycling game is going on right now. Okay, and the U.S. is not really playing a part in it, but the U.S. dollar is slowly losing clout as a result of it. Okay, and this election mess, it only stands to get worse over the next 4 months. It doesn't get better. It doesn't get better until January 2025. So we have 6 months of insanity ahead of us, right? Um, it's so bullish for gold. Real rates. So as the Fed is cutting, inflation probably stays. So when the Fed admits they're going to cut, whether it's Jackson Hole in August or sooner, whatever, as soon as the Fed admits they're going to start cutting, the curve is going to skew downward. And most likely, inflation will continue to moderate for another few months, but then it will probably curve back up again at some point in Q4 or early 2025. And then we will have negative real interest rates again. And that has historically been a very bullish situation um, for precious metals. And I feel very confident that we're heading back towards negative real rates over the next 12 to 18 months. And then just chart technical. So I know Monday was a down day, and these charts are as of Sunday. Um, but I view Monday as a gift. I view this little drop back to the 2360s as a tremendous gift. Okay, and I drew this little trend line, just to show that we're still above this little short-term trend support, right? And so I wouldn't really get too concerned unless we broke back under 2360. Um, but even if we do, for whatever reason, my call is the next 6 to 12 months, right? So we could have some short-term volatility in gold as we always do, but bigger picture, the setup, the overall macro conditions out there are very supportive of precious metals. And when I say gold, I also include silver in that. In fact, some can make the argument that the situation is even more bullish for silver because it's such a smaller market, and the industrial side of the equation, the solar demand for silver is just continuing to be very robust. Okay, so switching to equities, I want to make a point about technical analysis, and how one can integrate fundamentals and technicals. So technical analysis is these charts I posted here. So 98% of asset managers are fully invested. That's ridiculous extreme, right? That is a condition you see at a major top, right? And then you have the market breadth. Only 17% of S&P 500 members have outperformed the overall index in the last 30 days. So this deterioration in market breadth and narrowing leadership is at an extreme. You can just see this chart going back to 2015. It's never been this extreme in the last 10 years, right? And on pace for uh, beating the S&P 500. So the number of S&P 500 stocks beating the index for the full calendar year down to 25%. Right. So, and this is just another. So this is just market breadth. All of these charts are showing the leadership is from a handful, a dozen stocks. Most of them are also in the QQQ. And notice the QQQ, we're up to 500, 499. Look at this chart. Straight vertical since April. Incredible. And the QQQ and the SPY look the same because it's the same stocks that are driving both. But then look at the overall market, the Russell 2000, non-confirmation, right? Non-confirmation. Those small caps are not confirming the mega caps. And it's been this way all year. I mean, really. So just even in the last week, the mega cap techs have had a huge move higher. Russell's gone nowhere. So we have a very unique market condition. So this is the technical side of it. So the technicals are showing this very stretched market environment, both in terms of sentiment, both in terms of market participant positioning, and then narrow leadership, right? But there's no sell signal yet. There's no clear chart pattern sell signal. Just shorting a market because it's high and because it's gone up a lot is a great way to lose money. The same way buying a chart when it's low and it's oversold can be a great way to lose money. You can just keep going lower. You can just keep going lower, or it can keep going higher, right? So there's no clear risk level to short against. I mean, if you want to bet against this market here, you're just taking a stab in the dark. Why would shorting here be any different than shorting over here or over here, right? It's just, it's too tough, right? And so, as a technician who is very skeptical of this market environment, I watch and I wait, right? I'm not just diving in here blindly shorting. That would be rather foolish. And just based upon my experience as a trader for over 20 years, over time, that would lose more money than it would make, right? Just blindly throwing in a short here. But give me a little more evidence. Give me a little more evidence for the short side here, and I will be happy to take it, because this is basically the most stretched stock market I've ever seen in my life. Um, this is also kind of adds to my bullish case on gold. I'm just going to draw a little bit of a chart here, and I'll just make a little bit. this. This is not perfect. I'm just doing this on the fly. But you can see there's a little head and shoulders here in this 10-year note yield chart. It has not broken this neckline. I would like to see it break down under 4.2%. But if it does break under 4.2%, this would project to 3.75, 3.8% yield on the downside, right? That would be very, very bullish for precious metals, right? So we're teetering on the brink of a breakdown in Treasury yields. And I believe that we will get that breakdown most likely in the next 30 days. So Powell's going to wave that white flag here. Just watch. And then gold miners. So this is another gold miners. Look at these charts, guys. Newmont, Kinross, Agnico, Wesdome, 52-week high party. It's a 52-week high party in the gold miners. When the gold miners are trading this well, it is telling you we are in a precious metals bull market. Don't overthink it. Don't get obsessed with your junior, your little tiny shitco 10 million market capper that's not moving. That's not an indicator of the real market. There's real money trading these real companies, right? Not the shitco juniors, the real companies. Newmont, Kinross, Agnico, Wesdome. Wesdome just reported a record quarter this morning, record production. Pull up that quarter. I don't have time for it, but pull up their quarterly results. Like look at their average head grade, look at their profit margins, their revenues. It is possible for mining companies to deliver upside surprises and good news. Wesdome, case in point, look at how much the stock is up year to date. It's up more than 50%. Kinross up more than 40% year to date. You can make money in mining stocks by buying the good ones, the ones that are delivering results, right? There's no, it's not complicated. Markets respond to results, deliver the results, perform, and they will reward you. I get the question all the time. What's it going to take for the junior mining sector to rise? Well, how about some good news? How about not heap leach pad failures that cost $500 million in market cap? How about not failed drill programs, right? How about delivering results, performance, deliver good drill results, record quarters of production and profitability, right? That's what the junior mining sector needs to rise. Good news. Good news. New discoveries. Recall Hercules Silver last year, new discovery, right? Hold 2305. New discovery brought this stock from 20 cents to $1.60. And this was not a small share count at the time of the discovery. And it moved the needle in a massive way, right? That it's not, there's not some magic formula of like Bitcoin needs to fall or Nvidia needs to crash for junior mining stocks to go up. No, deliver discoveries, good results, perform. Don't put out bad news all the time, right? So I got off on a little tangent here, but this is also why we're in a bull market. The sector, the leading stock, the leading gold producers in the world are performing. This is one of the best first half of a year in history. In history. So don't tell me this is not a bull market. This is absolutely a bull market. And those who have been hating on the gold miners and bashing Newmont have missed huge returns in the first 6 months of 2024. Huge returns. Okay? Remember, washed out sentiment, huge negativity is more often than not a buy signal. Embrace the hate. Now, these stocks are not quite as hated as they were in February now because they've performed, but the juniors are still very much hated. So maybe that's where the opportunity is here. So just run through a few charts. Okay, so I mentioned Aurion Resources, AU.V. They put out a news release this morning. There's not a whole lot to talk about, but basically the news release is confirming that Aurion is in talks with Rupert, their neighbor in Finland. Rupert has the deposit, the Akari deposit next door, over 4 million ounces. Great ore body. And just both companies put out news releases confirming that they're in talks. What are the talks? What is in the talks? What's the substance of the talks? The terms of the talks? No details, but just a little bit of gamesmanship there on the part of both companies, just confirming that they're in talks. And just my take on it, um, doing a deal is good for all parties. Not doing a deal is not good for all parties, right? So something's got to get done here. Just a matter of how it gets done. Intrepid Metals. So notice Intrepid. So this is Copper Explorer in Arizona. I visited this project back in April. They started to put out, results at the end of April, May, and then they put out their last results from their maiden drill program at the Corral copper project in Cochise County, Arizona this morning. Now notice the stock has been trickling lower along with the copper sector had a bad June. That was part of it. Also, some shares came free trading from a previous financing. That was part of it. And then it just kind of was a lighter news flow period for the company as they're waiting for these final assays. And now we're ticking up. So look, 45 cents is a big support level. It's also the strike price of a big chunk of warrants out there. Um, I view it. Look, you buy. I'm not gonna give you investment advice. I'm a buyer on weakness. I was a buyer on weakness in June. I think at whatever 20 million, 25 million, 30 million Canadian market cap, Intrepid is a very attractive proposition. I think at that 30 million or less Canadian market cap, it's kind of a bargain just based upon the size of their land position, the quality of their project portfolio in Arizona, basically either the best or second best mining state in the US. And you got a quality management team that knows how to run a company, seasoned veterans. They're not going to blow through your money in 2 months on some garbage, right? They're managing shareholder capital very astutely, and they're in this to generate value over the long term. This isn't some short term fly by night thing. Like these are serious guys. So if you want a serious company with plenty of copper exposure, with some gold kicker as well, and a great state, I think Intrepid is a good one. And this next program, so you're going to have a second follow up program. It's going to be bigger than the maiden one for sure. And then they're also going to drill their Tombstone South project. So that's a completely separate project in the vicinity. Um, and I believe that's gonna generate a lot of excitement. The ramp up to that drilling in the fall, I think that's going to be very exciting for shareholders of INTR. Okay. Um, so this morning, I'll just say that you can go through the news release, you can look at the company's presentation, but clearly, Ringo is where it's at. So there's three zones at the Corral Copper Project, and Ringo looks like the biggest and highest tenor one. Um, Look, if this was a completely new discovery, if this zone had never been touched before, and they drilled 112.95 meters of 1.66% copper equivalent, this would be like a Hercules kind of move, 20 cents to $1.60 or something. It would be well above 100 million market cap if this was a complete new discovery. It's not a completely new discovery. Um, that wasn't the objective of the maiden drill program. Most of the maiden drill program at Corral was confirmation of historical drilling, non 43-101 compliant, right? So the market's up today, but it's not going crazy because the market understands this isn't a completely new discovery. The Ringo zone was known when they acquired the project, right? But now phase two gets a lot more interesting. And the fact that they're confirming this kind of tenor, like you just don't get 1.5% copper over 100 plus meters near surface or basically right from surface In Arizona, that doesn't happen so much anymore. Okay, you can't just find projects like this in 2024. So they have a very special project here, um, and now it's what's next, right? So how are they going to expand this? You know, copper, gold, silver bearing zones. They have three of them. Can they connect them? Will there be step out drilling into new areas? Right. Lots of questions to be answered, but obviously, like this kind of drill intercept is absolutely exceptional. So that's it on Intrepid. Victoria Gold. Let me put. Do I have the Victoria chart? No. Let's pull that up. Oh, another low. So just a couple comments here. I have a lot of thoughts on this. I don't have them completely well formulated for this video, so excuse me. I took a stab at a long position yesterday at 75 cents in Victoria. Look, not a huge bet and fully willing to lose money on this one. Okay, it's definitely a gamble, no doubt about it. But I don't think I've ever seen a stock quite this oversold before. And the sentiment on the company is terrible, and a lot of it is by their own making. I'm not sure who's advising them on their PR strategy, but their PR strategy appears to be silence. And in junior mining, we've learned many times that silence means bad things, right? So if that's the image that Victoria wants to put out, that it's really bad, it's worse than the reports, then they're doing a good job of that. But if they actually want to convey another message that maybe it's not quite as bad as appears, maybe they should do some PR. Maybe they should actually speak to the market in more than one paragraph news releases. Based upon what I've read and heard, drinking water is fine. There's not massive cyanide contamination of the water in the area. There is some chance of a further slide, um, but I've also read that they've done a lot of work to stabilize and sort of gate off this area that's at risk. Um, I would like to understand more. I would like to hear from the horse's mouth. I'd like to hear from the company that obviously knows more than anyone. Um, and if it's not completely catastrophic, there is probably a way to turn the situation around and get this operation back up and running at some point in the future. When is at some point in the future? I don't know. It could be 3 months, it could be 6 months, it could be 12 months. I have no idea, but it'd be cool to have some more information. So, unless it's just absolutely horrendous and worse than we can imagine, Victoria should probably consider switching their strategy of pure silence, of nothing but silence. Okay, that's my take. Um, and then Hercules Silver. So, and this kind of goes into the TA in junior mining, bullet point. We don't really have anything new from the company. We just got that news release a few weeks ago saying the drill program is slower than expected. But now we've had a rebound after it found support at 50 cents. So uh, it basically like nothing has really changed. Just Hercules in all the first 6 months of 2024, it's just been in this range, gyrating, oscillating in this range. Seems like 70, 75 cents area is sort of a center of gravity, and that's still near where we're trading. Until we get drill results with real assays and some more information, it seems like the market is fine just biding its time in this area. And a lot of people ask me, so does TA actually work in junior mining? Well, yes, it does, but you have to know how to read the charts. The technical analysis is only as good as the person reading and interpreting the chart. Um, and just a couple of observations about this. The first way we can use technical analysis is simply by analyzing trends. The second way is support and resistance, right? So in Hercules, there's no trend in 2024. It's a sideways oscillation testing the edges of a range. So sell resistance above 90 cents, buy support 60 cents and lower, right? So until that changes, until we get strong evidence of that changing, That's what technical analysis is telling you. There's no buy or sell signal or the chart's telling me. I looked into the chart and it spoke to me and it's predicting 160. No, that's not what the chart's telling you. You just made that up. You just completely fucking made that up, right? The chart is not giving you a price prediction. It's not. The chart is telling you about the past. You're reading and learning about supply and demand from the past. Just like fundamentals don't tell you the future, they just tell you the past. Company financial statements, that's the past. Technical analysis is the same too. We don't have information about the future. So that's why when people say T doesn't work. No, you're just listening to an idiot who doesn't know what they're talking about. That's why it doesn't work. Okay. So when this range breaks under 60 or above 90 on volume and then closing above the range, we will get some new information. We will get some important information that probably should not be ignored. All right. And that's it. Okay. Site visits. American Eagle. Oh, one more thing about technical analysis in junior mining stocks. So we often get these situations where a stock will have a breakout move on good news, and then it will proceed to slowly consolidate and trail off, sort of like melt a bit like a wale. And generally speaking, not all juniors are the same, but generally speaking, the longer this sort of pattern plays out, the more bearish it is, right? So junior mining stocks can be thought of as expiring milk cartons or matchsticks, burning matchsticks, right? They have a finite life. And if a company can't deliver impactful news, within a certain period of time after the super impactful news that moved the needle in the first place, then you get this sort of melt. You get this melt pattern, right? And where are the real money buyers stepping in, showing conviction, right? And at first, they seem to be doing it at 65 cents. Well, now that range has shifted lower to 50 cents. And if it continues on, that might reset even lower, right? The company needs to generate results. They need to generate news flow. That's the only way you get a junior mining stock to move up and stay up. Results, real concrete results. Rocks are hard, water is wet. It's not narrative, it's results. And in junior mining, because it's an exploration game, it's assays, it's lab certified assays. That is what does it. That's what moves the needle 95% of the time. And Ramp had that incredible, with like 7 meters of 70 grams and a completely blind new discovery. Well, look at what the stock did, but then there were more assays to come, and we got them yesterday, and they were disappointing. But I think context is key. We're dripping lower today. Okay, that's fine. Company probably needs to finance, and the market is adjusting to a certain level at which it's willing to finance the company at. But I didn't expect the follow-up results to be anywhere near that first, whatever, 10 meters of that one hole. I think anybody that understood the news release and spoke to the company knew that. Um, but what I find interesting is that there's Ranger and Rogue, right? So Ranger's the one with the 70 grams gold over 7 meters. Rogue, they got some sniffs of gold there too. Now, it wasn't nothing like Ranger, but there's gold. This is a gold system that wasn't understood previously, right? They got this property for nickel and platinum group metals, not gold. So it's a completely new geological model. They need to figure out, they need to understand better. But generally speaking, you don't get 7.5 meters of 73 grams per ton gold at 200 plus meters depth in pure isolation, right? Like you usually don't see that. There's probably more somewhere, right? And when you get that kind of tenor, that like 2.5 ounce gold tenor, that's really impressive. right? Now, it could be super small. It could be a really small, like 10,000, 20,000 ounce high grade gold ore body at 200 plus meters, and it's not economic if it's that small, right? It's not even close to being economic, but there's a chance it's bigger. And that's where exploration work comes in. But with that tenor, I mean, you got to realize the Ranger target, they drilled one hole into it, first hole they've ever drilled into it, and they hit that. That's like winning the lottery, right? So do the math on the odds of winning the lottery. And then if that was just completely in isolation, the odds are in the millions to one. It's probably more. There's probably more. And that's why I bought the stock on the dip yesterday. Okay. Final one, American Eagle. So I'll talk more. So I'm going to make a separate video on my site visits, American Eagle and Westhaven, but I invite you to read on my Substack about and see the pictures from my visit to American Eagle Gold in the Babine region of BC, Canada. Right. So subscribe to my Substack, read this one. Also get the premium video where I talk about what to look for, questions you want to answer on a site visit, and educate and enlighten yourself. And then stay tuned for my next video in the next couple days, speaking about Westhaven and American Eagle in more detail. But for now, I am off to the Rule Symposium in Boca Raton. Have a powerful trading week.